Hello traders and welcome back. I'm Natalie MacDonald and you're watching the latest edition of Sydney Direct. The Australian federal budget is in, but what does it mean for the local share market and investors? Well, I caught up with Henry Jennings at BBY Limited to find out more. Henry, always a pleasure to catch up with you. Thank you so much for speaking to us today.
Pleasure, Natalie.
Okay, so we're talking post that Australian federal budget. Let's take us pre-budget just for a moment. Now, I want to pick your brains on this.
Yep.
Telstra took a real pre-budget hit, almost related to that government bond fallout, really. The telco seems a slightly random victim almost. Can you sort of explain kind of some of the metrics and perhaps methodology in that?
Well, I guess Telstra has always been kind of considered as a AAA rated, almost like a government bond. It's got a very fixed payout ratio. They're paying out 100% of earnings. In terms of dividend, it's a yield stock, so it's very much geared to the bond yields. And at the moment, with no sort of growth really in Telstra, and maybe some worries about interest rates here rising in the future after the last RBA meeting. Maybe we've seen that big sell-off in Telstra because of that. But the banks have been hit very, very hard. So it's hardly surprising then that really Telstra got hit. They've been down from $6.60 and they nudged under $6 yesterday before bouncing up to $6.10. So just pressure on them, I think, because of that the bond yields.
So what then were some of the budget takeaways that investors will be carrying into sort of these upcoming sessions?
I guess, from a political point of view, the budget was a far more palatable thing we saw last night, far more palatable than the first budget, which was an absolute disaster in terms of popularity and being able to get any of the measures through. So this will restore some of the goodwill towards the government. As far as the measures go, most of the big things were leaked well in advance, as they do tend to be. I guess the childcare sector is going to be one beneficiary, and also I guess the other biggest beneficiary is going to be retailers that are selling anything that small businesses are going to be buying for their businesses, things like cars, trucks, computers, anything really. With this new small business tax concession the government has brought in, it will be a tradies' paradise, I suspect, and they will be out there filling their boots with new toys that they can run through their business tax-free.
Absolutely, and as you said, a lot of this was leaked already. I guess almost with that in mind, Shane Oliver at AMP Capital said he doesn't really see there being sort of much share market impact as a result of that. Would you agree?
Well, I think we're still very much hostage to what's happening overseas with their bond markets. And we've still got this sort of downer effect on the banks at the moment. They've had such a great run and they're such a big part of our economy as well. So I don't think it's going to have a massive effect initially. There will be pockets of stocks that will do well, such as childcare, such as the retailers, the JB Hi-Fis, maybe the Officeworks parent Wesfarmers will do okay. So we will see some benefits to the market, but I think overall it's going to be a bit lacklustre, and we've still got to really believe whether the economic forecasts that the government's put in place are actually going to be even sensible, because there's a lot of fingers crossed and a lot of hope there, and a lot of hope based on the iron ore price, which is still, it's recovered, but it's still not exactly too healthy.
If we consider kind of that hope, we've been generally speaking in a downtrend, leading into that budget, we were able to snap a 5-day losing streak on the ASX. How does that sort of fit into perhaps your medium-term outlook then for the local share market?
Well, I guess, as far as I'm concerned, the share market's always been stuck in this sort of 56,000 kind of range. We plumbed towards the bottom of that range. We have bounced. I suspect the bounce will sort of peter out as reality starts to bite, and we do start to head in towards the Northern Hemisphere summer, which is traditionally quieter. We've also got the June tax year coming up, and we do get some tax loss selling there. So there might be a little bit of a period of kind of going sideways before we see what the spring brings for Australia and the autumn brings for the Northern Hemisphere.
Henry, always great to receive your comments. Thank you so much.
Pleasure, Natalie.
Certainly plenty coming up to keep you interested, so do stay tuned to Sydney Direct here on Dukascopy TV, where I'll be speaking to plenty more financial insiders right here in the hub of the Asia Pacific region. For now though, it's goodbye.